If there was ever a barometer out there, I guess, for what's going on in the U.S. economy, it's got to be Macy's. The chairman and CEO of Macy's joining us right now. Jeff Gennette joining us today down from the epicenter in New York there in Herald Square. Also joining us here is Bloomberg's Emma Chandra. Emma, take it away.
Thanks so much, Romain. And great to see you, Jeff, as well. As Romain said there, coming to us from Herald Square. A big beat today, of course, for you on earnings. Those comp sales coming in much better than expected. You raised guidance and you said this isn't a short-term pop for Macy's. But a lot of that consumer demand, Jeff, coming from those stimulus checks, and they're not going to last forever. What is going to replace those checks for the Macy's consumer?
Two things. One is the vaccination is taking hold, and you're definitely seeing a change in the customer behavior as they kind of reemerge a post-pandemic life. And they're going to events, they're going to dinner, they're going to church, they're going to proms, they're going to weddings, and that just seeds buying activity in categories that Macy's and Bloomingdale's are quite strong in. So that would be one. And the second thing is just the traction we're getting with the Polaris strategy, which we launched right before the pandemic. Emma, the last time we talked in February of 2020, we didn't let the crisis go to waste. And so we did a hard pivot to digital. We really worked on our cost structure. We really focused on new categories that customers were voting on. And so that, coupled with the economic tailwinds of this, you got a healthy customer, they got lots to open to spend, they have, low debt, they're ready to spend, they're ready to get out, they're ready to spend with Macy's and Bloomingdale's.
Jeff, you mentioned there those economic headwinds. What about some tailwinds? Of course, I want to talk to you about cost pressures. Of course, a bit of a debate about whether we're starting to see some sustained inflation. How is that impacting your inputs? Are you going to have to pass any of those costs on to your consumer? And what does it mean when it comes to your labor costs as well? We saw Bank of America today raising its minimum wage. Are you going to have to increase wages as well?
Yeah, let's talk first about on the product side. So, what we've really enjoyed over the past 6 months has been, our inventories are quite lean. Our average unit retail is way up. Our regular price sell-through is way up. I'm not concerned about inflation and cost increases and how it's going to affect the retails. I know I've got a consumer based on where I trade. I go from off-price to luxury that can sustain those continued sell-throughs in categories that customers really want right now. We're a fashion business. You put great value into tasty fashion, my customers are going to convert. As it relates to your second question about, just colleague demands and just the amount of open jobs that a lot of retailers have based on all this increased demand, we're all in this competitive war right now for talent. And one thing I can say is that once they enter the Macy's and Bloomingdale's culture, they're happy, they stay. And our turnover rates are down dramatically, which is really good to see. And so, but we're very competitive. And be it by function, by area of the country, if it's in the wage or if it's in the incentive, if it's in benefits, those are all things that we're looking at. We're going to be competitive to get the right talent to sustain our trend going through the back half of 21.
Let's talk, Jeff, here about getting back to normal here, pre-COVID normal, I should say. You're standing there in Herald Square, of course, the flagship store for Macy's. I've been in that store plenty of times pre-COVID. It's always crowded. How are you going to deal with getting people back into the stores safely now that we seem to potentially be on the tail end of this pandemic?
Yeah, so it's a great question. When you think about Herald Square, there's a big chunk of our business that isn't coming back in 21, which is the international tourist. And so we don't expect that to start to, ring the registers in, urban flagships like Herald Square or Union Square in San Francisco until 22 and beyond. But to the balance of your question, Romain, about when you look at most of our branch stores are seeing that traffic rebound very strongly right now. It started in the southern part of the nation with the vaccinations and just the weather. And you're now seeing that move up into the northern areas of the country. So I'm actually very pleased with the traffic that we're getting in most of our stores. The international flagships, they're going to be tough for at least another year. And when you look at Macy's and Bloomingdale's, about 3 to 4% of our annual sales is based on international tourism. So there's about 30 stores that are affected by that, but the balance of the fleet is in really good shape.
Jeff, let's dig in on Herald Square in particular a little bit more. The new tower project, anything you're seeing about the synergies that you could add between people who will be looking to work from there, to be coming to shop from there? Give us your vision of the new Herald Square. We're looking at pictures of what perhaps it might look like.
Yeah, so my headline here is just always bet on New York. And, this is the most vital city in our nation, and for very good reasons. And, Macy's has been, just a cornerstone of New York culture for 160 years. Here we are in Herald Square. We've been here for 120 years. So this is a long ball for us. We're playing for the next number of years of growth and development that's going to happen in the city. And I'm just committed to that. And so us investing, in this iconic flagship, very productive, very profitable, to put an office tower above it, to use some of those proceeds to invest in Herald Square and all the mass transit that's beneath this building was the right play for us. So we've been working on this for about 4 years. We now have unveiled it. We're now letting all of our community leaders, working with the mayor's office, with the governor's office. We're working with all of the appropriate players to take this to the next stage.
Jeff, on that skyscraper, I imagine the negotiations are going to go on for some time. Have you got your investors on board? Because how does it play into that broader strategy? You mentioned the Polaris strategy there, really about turning around, of course, the retail and core of the business. How does building that skyscraper really marry that strategy as well?
So, I mean, when we've talked about this in the past, it's really about how we look at, one of the big pieces of our portfolio is our real estate. And when you look at that, and so this is an unencumbered asset. It's almost a city block in New York City. So, this is an opportunity for us to, how do we want to monetize that? And how do we recognize that it's a very productive, profitable piece of our retail business? So this was our solution for that. As you've seen in the last 5 years, though, we've looked at a lot of our excess real estate, and we've either sold off pieces of it, we've converted parking lots, we've done we've done co-developments with developers. We're always looking for opportunities to increase shareholder value with this vast level of real estate portfolio that we have.